Welcome everyone. We'll start our first lesson. It's a Unit 4, Finance for Managers, ATHE Level 4, Diploma, Extended Diploma in Management. So if you have any question, feel free, just drop me email on my email address. A quick introduction. My name is Anjum Sattar. I'm teaching with the UK University last 5 years, and I'm teaching other places as well, such as the University of Bradford and the University of Hull as well. So today I'm with you, and my background, I'm partly qualified ACCA, MA in International Business Management, MA in Marketing Practice, MBA, and PGC is teaching qualification. I work in the industry and in logistics, in finance and marketing. So I'm carry on embedding examples, from industry backgrounds as well. If you have any question, feel free and ask me. So please, can we just introduce ourselves first, please? What's your name and where you're from? And what
my name is Minje Song, and I'm from Korea.
Okay, brilliant. So you're working? Yes.
No, I'm a student.
Are you a student? Okay.
Yeah.
So what you done before in terms of your qualifications?
I will enter aviation school.
Okay. Good.
Yeah.
So anything you learn about finance before? Accounting,
No.
finance?
No, never.
No problem. I'll try my best, give you background and some examples as well. Clear. Normally, how do you learn better? You learn by watching videos or writing. How you learn better? How you prefer to learn?
How?
Some people really like to watch videos. Some people like, by writing. Some people do some activities. So how you learn better? What's your learning style?
My style.
Okay. You write. You like to watch videos?
Yeah, video. Yeah.
Okay, brilliant. That's fine. So I'll try to include more activities so you will learn better. Huh?
Okay.
Okay, brilliant. So we'll start. So today lesson is Unit 4 and we'll cover LO1. LO1 is about
extended diploma in management.
Yes, it is. Hello. Hello, is it Abdullah?
Just a second, sorry, I have to mute this.
Yes, please.
Okay.
Hello. So if it's a bit background noise, so please you can chat as well in the chat box. And we'll start. As earlier mentioned, my name Anjum. Today we are doing our Unit 4 and we'll go through LO1, which is Learning Outcome 1. Before starting this new modules, first of all, I'll go through all the assessment criteria with you, and then we'll start our proper lessons. Anybody, any question?
No.
Okay. So this modules is a learning outcome. All learning outcome and assessment criteria is on Moodle as well. So please carry on following Moodle. And so finance for managers. So today we'll go through LO1, understand the requirement technique for financial recording and reporting, how we can record the transactions in accounts, so which we'll go through, and how we can report to the public and different stakeholders. So do we know what is meant by stakeholders? Stakeholders mean anybody who has any interest in the business is called stakeholder. They have a stake in the business. Stake mean interest. They have an interest in the business. We call stakeholders. So which we'll go through. Okay, so explain the purpose and the requirement keeping financial record. Why we keep the financial records? What is the purpose behind? That's the first assessment criteria. Analyze the techniques of recording financial information in a business organization. So where we'll discuss different types of organization, analyze the legal and organizational requirement. What are the legal requirements? Why we need to keep the record? Like, tax office, tax purposes, HMRC, we say in the UK, general tax office in different part of the world. All the companies, they keep the card, they have to present and they have to show the information to the tax office as well as tax authority, and evaluate the useful of financial statement to stakeholders. So which will go through the stakeholder and the financial statement. So under LO1, learning outcome 1, we have a 4 assessment criteria which we're supposed to assess when we'll go through the assignment brief. So today lesson, I'm going through, please, when you do your assignment, it's good to be look around the inductive content, what we supposed to be learn and what are the keywords in this learning outcome which we supposed to be. Legal requirement is a key word there. What are the legal requirement? It need to be every financial statement need to be after every 12 months must need to be produced, must need to be public domain. It is a public limited company. Internal control requirement. That's why we want to keep the record. Financial record can be in double entry bookkeeping. What is meant by to debit and credit? Day books and the ledgers. What is meant by trial balance, manual accounts and the computerized accounts? What is the difference between manual accounts and computerized accounts? And requirements of reporting and different financial statements, stakeholders, and how a stakeholder can use the financial information. So all our lesson will be, today lesson will be focused on all these, the keywords, or we call the buzzwords, which is also I have included in our slides as well. So we'll start. Okay, welcome. We'll start our first lesson, Unit 4, ATHE Level 4, Finance for Managers, Purpose and the Requirement for Financial Records, Legal Requirement, Tax Requirement, and Internal Control. So purpose is legal requirement. So to meet the legal requirement, that's why we want to record the financial information in shape of accounts. We want to keep the record of financial recording, double entry bookkeeping. We have a book is a purchase day book, sale day book. All these are the books of accounts, which we record all the transaction, which I will go through with you. Trial balance, all the ledger balances, all the daytime books, which is we call purchase day book, cash book, and sale day book. All these books balances goes into the trial balance. And if you are a bookkeeper, we record transaction up to the trial balance. If you're accountant, you should prepare the final reports. So all will go through manual and computerized accounting. So we'll raise a question. What do you know about double entry bookkeeping and financial statement? Anybody, any thought? What do you know about? Do you know double entry bookkeeping, or have you heard about double entry bookkeeping?
No.
Never heard. Okay, double entry. Yeah. If I'll record one thing, I'll record £100 on my debit side, which is on the left hand side. I should record £100 on the credit side as well. It's mean if you buy things, you're paying the money. So your money is going out, but you're getting something against it. You're not giving the free money to someone. Yes. So you're buying something, you're paying something. Even in the charity, of course, you're getting the services, your donation. So donation is, you can treat as expense for the business because you're paying it. So expense is a debit, and the money going in the from the business is a credit. So that's we can go through. Okay. So how many types of financial statement? Anybody knows how many types of financial statement we prepare in accounts?
How many?
Yes. How many types of financial statement. Do we know the financial statements? Where we record the financial transaction. We have 4 types of financial statement. First statement we call profit and loss account. Profit and loss account, where we show the income and expenses of business. Income and expenses. Where we can show income and expenses. This also known as statement of comprehensive income. It means how much income, how much expense. That's the first statement. Second statement we call statement of financial position, which shows the position of the business. This also called balance sheet. Balance sheet, where we show our assets, our liability. Anybody knows what is meant by assets? Anything you own it, anything like a house, like a car, like a cash, all these are your assets. Asset mean anything you own it, anything has a value is called our asset. Asset is anything you own, it is your asset. Liability, anything you owe it, anything you borrow from someone, anything which you need to settle in future. It's a legal obligation by law, you have to pay in future. That's called liability. Capital, what is meant by capital? Capital mean investment, like shares capital. Shares capital is mean investment in the business. So that's all goes in. Then the third statement we prepare in account is called statement of cash flow. How much cash inflow, how much cash in the business, and outflow, how much cash went out of the business. Outflow, inflow and outflow of cash we record in statement of cash flow. Fourth statement we call statement of change in equity. Equity mean the share capital. How many shares we have issued during accounting period. So that's all we can see. How much dividend we paid. That's all shows in statement of change in equity. Anybody any question? So guys, everyone need to remember we prepare 4 types of financial statement. They provide the financial information. Statement of profit and loss, which show the profit and the loss of expenses, which shows income and expenses. Second statement is called statement of financial position, which shows our asset, liabilities and capital. And the third statement which we discuss is called statement of cash flow, how much cash in and out of the business, from the business. And the fourth statement we call statement of change in equity, how much equity share capital we have in the business. So that's all you know. So next we're looking now assessment criteria 1.1. What is about 1.1? Explain the purpose and the requirement for the keeping record. What is the why we keep the record? If you don't have a record, you don't know what happened with your business. Because 2 types of account we use and we keep the record. One is called management accounts, management accounting. So management accounting is the internal. For our internal record. Internal, because is the managers implied, they need information from management accounts. Financial accounts we prepare for external users. So 4 types of statements, those we prepare. Income statement, which we also known as the profit and loss, balance sheet, cash flow statement, and equity statement, those come under the financial accounting. The purpose of information, why we need information? We need information for planning, controlling, and decision making. If we don't have information, we can't plan, we can't control, we can't make a decision. So that's why management accounting is all about planning, controlling, and decision making. Financial accounting, we keep the record about the performance, how much company earn the profit, how much worth of the asset we have in a year, how much liability we have, how much money we owe from. So all this shows under the financial accounting. Legal requirement, management accounting, no legal requirement. But the financial accounting limited company must need to produce the account in 12 months. Format, management accounting don't have any format, but the financial accounting need to. Nature of information, it can be financial and non-financial, but in a financial accounting, financially. Time period, it can be historical and forward-looking. But the financial accounting, all the past information, historical is the past. Okay, what is data? What is the information? What is the knowledge? And what is action? Data is a raw facts and figure. 1, 2, 3, 4, 5, 10, 20, 30. This is the data. It's not an information. Data is a raw fact. If I'll say 10th of the month or 10th July, you have exam. So that is become a data. It's become a data and information. So we have a numbers. It's become a information with the numbers because we put the meaning with it. So data, first we have a data. Data is a raw fact. Then it's become a information. When you have a good information, it's become your knowledge. When you have information, you have a knowledge. If you don't have information, it means you don't have a knowledge. So if you have a knowledge, you make the decisions in a business. So knowledge is very important in a business. So financial data, what is meant by financial data? Data is derived, data is collected from many sources. We process in many ways. They use many people. Unfortunately, this means there are the many channel of errors. If we don't record the data right, we don't follow the double entry bookkeeping, we not record the right data, we're not going to make the right decisions from the data. So that's why data is very, very important in the success and the failure of organization. So for the financial control, data is very crucial. So we should record the right information in terms of our book of accounts. So organizations often have to decide between the timeline and accuracy. Taking too long to capture and process accurate data means they reaches and the decision maker too late. A balance is always necessary to order to gain the maximum benefit in the timely manner. So the validity of the data must need to be valid, which can be not outdated. So first is the data, then it's become a information, then become a knowledge. So data, information, and knowledge. Data become information and it's become knowledge. So then we say garbage in, garbage out. It means the data you record well and the information you can produce from the data. So that's why we need to be record correctly in a good manner. So double entry bookkeeping, we must need to follow the double entry bookkeeping to be record the data effectively. So internal source of financial data, internal source, which is mean within the organization, direct from the supply, direct from the customer, numerous of personal spreadsheet like Excel where we record the data. External source of financial data is the company house. In the UK where we record the company, we have a company record is the company house. The company house have all the financial statement, all the financial data. Database of financial information, libraries and research documents, all we can get the data. Any question? We all okay? We getting?
Yeah.
Okay, next, good information. Why information? What sort of the quality need to be in a good information? Good information always need to be relevant. Relevant, whatever you're doing, it need to be relevant information. Reliable. Who record it? When record it? That need to be reliable. Up to date, not 10 years ago information we are discussing today. It need to be up to date. It need to be accurate. If you're buying the information from someone, you need to be look around the information is a value or is costing you, because if you're collecting the client data and you're paying some money to collect it, you need to look around what benefit you will get out of it. Is benefit need to be higher than the cost? Meet the needs of the user. If you're a user, you want to use the data and information, is it meeting your needs or not? Is it understandable? All this question you have to ask. Accounting consists of two elements. First is a recording transactions. We should record the transaction in a systematically that could provide or should provide the up-to-date information. Summarizing the transaction for the period. We have so many transactions. We have a cash sale, we have a credit sale, we bought a stock, we paid salary to our workers. These are all the transactions. So every transaction we record in our accounts. So then these transactions we can summarize it, how much money we paid our salary to our salary staff, how much we spend on the advertising, how much sales we have, how much profit we generate, how much goods we bought it, how much we sold it. All the information we can find in accounts. How much money we spend on the repair of building, how much new building we bought, how much new machinery we bought. All this information we can find in the financial statement. So first statement, which I'm focusing two more important statement, income statement, which is also known as the profit, reflect the performance of the business. So if you want some information about the business performance, the company earn the profit or make the loss, you can look around the income statement, which is also known as the profit and loss. If you want to see the company, how much worth of the asset they have, how much machinery they have, how much property they have, how much other things they have. So all this you can find in the statement of financial position. How much liability they have, how much capital they have, investment. So management accounting, which I earlier said, management accounting is internal, which help to make internal decision. It's a legal, it's a by law, public limited company, they must prepare the accounts, financial accounts. Management accounts not compulsory. We don't want to show outside the public management, but the financial accounting is external. So those provide the information. According to the management accounting practices, economic performance we can measure. Financial accounting follow the legal. It's a legal by law accounting standard. We need to follow. We need to follow the gaps, which is gaps known as a journal acceptable accounting principle, which will be summarized into next slide. Further slide. Okay. Any question? Anybody, any question?
No.
Okay, so then we look analyze the technique for the recording the financial information, how we can use and what sort of the organization we have in a business. Those sole trader need information. Sole trader is a mean one person business. If it is a corner shop, like one person running own business is called sole trader. They also have to prepare the account, but they don't, it's not compulsory. It should be on the public domain. We should submit to the tax office, but not to the public. Partnership. Partnership means two or more people join together and do the business. That's called partnership. And partnership also publish the accounts. How many partners we have, what is the sharing ratio between us, how much losses will be, how much salary each partner is getting. All we can look around in terms of partnership. In different countries have a different partnership act. In the UK 1890, in the year 1890 the partnership act being set up. The company means the artificial person. Is the company is a legal entity. The company is registered in the company house. In other country is a security commission the company, how they register the companies. Company have a directors. Company issue shares to the public. Company can be two types. One is called public limited company, which issue shares to the public, like a Unilever, like a Procter and Gamble, like various other companies. Those are the public limited. And private investor come together, invest it, set up the company. Company have a limited liability. If you're a director in the company, nobody can claim from your personal house. If you borrow the money in the company and the company can't afford it to pay back, the bank can claim. If you borrow from the bank can claim you money from your company asset, not your personal asset. That's meant by the limited liability. You're not liable. Any question? So types of businesses can be sole trader, partnership, and companies. Company can be public and private. What is accounting? Accounting definition is keeping financial record up to date and preparing the financial record statement for the organization, recording business transaction in a money term, recording financial information, and advising owner how the business reports are assessed, the past performance, and make the decision for the future. So that the statement is a process of identifying, measuring, and communicating financial information, and we can make a lot of decisions on. Purpose of accounting systems. Why we set the accounting? Ensure all the transactions are recorded correctly, and together prepare the period. Ensure the business can keep the track its assets, its activities, facilitate management and performance, help to obtain the financial and other form of credit, to meet the statutory requirement, which mean the legal requirement. So we have transaction in accounts, like you bought furniture. So furniture, let's say you want to buy a furniture. How you can buy a furniture? What you need? Two ways to buy a furniture. How you can buy a furniture?
Furniture.
Yes, you want to buy some chairs, some tables. So you can buy, if you have a cash, you can pay. So furniture you are buying, furniture is a debit, money, furniture is a coming in a business and you paying the money. If you don't have a cash, don't have a money, what you will do? You will buy on credit, which you will pay in future. Yes? So that is one transaction. So transaction is one activity which we can. You're buying a furniture, so furniture is a debit and the cash is a credit if you're paying by cash. If you're not paying by cash, you are creating a liability. It means you will pay near future. Yes? So sometime we can buy the things credit. Then we can record the transaction in different books, which is called the primary. We use different documents and then we prepare the ledgers. So I'll show you. Company keep record, internal use for external use. So transaction, cash sale is one transaction. You're selling things on cash. You're selling things on credit. Your sale return. These are all the transactions. Book are primary document, sale invoices, credit notes, remittance, purchase invoices. These are all the primary documents. So we keep the record. Book of prime entries, cash book, sale day book, purchase return. These are all the books of prime entry where we record all the transaction into the separate book. Anybody, any question? So accounting start with the transactions. Okay? Accounting start with the transactions. In the transaction, we have always two things, one debit, one credit. Transaction should be recorded in two. It's called double entry. It means two affect every transaction. Yes, one is a debit, one is a credit. Okay, then we have invoices. These are primary document, and which book we record. Okay. Principle of double entry is a dual effect. Every transaction to effect on the business. Business buy goods for resale with the cash. Goods have increased and the cash has decreased. Separate entity. So business is a separate entity. ABC Limited Company is a separate entity. Entity means separate organization. Accounting equation where we record the assets minus liability. Like you buy a house, you paid £50,000, £100,000 is a house, and £100,000 worth of the house you bought it, you paid £50,000. So house value is 100,000, which is your asset. You paid 50,000, but you owe it 50,000. So 100,000 minus 50,000. So your net asset, which is you own it, is a 50,000. And it means you have an investment in the house is 50,000. Capital is mean investment. So 50,000 is your liability. Still you need to pay to the bank. You can't say is your house. You have only, you can say is a book, is a line registry is on your name, but actually you not own it fully until you paid it, because you have a liability to pay. Does it make sense?
Yeah.
Okay. So accounting equation, we use the word to learn the debit and credit. Debt click. So you guys, you need to remember the word debt click. So what goes on the debit, what goes on the credit? Thus we use the double entry bookkeeping rules. Assets always goes on the debit side. Thus goes on the debit, my left hand side, and my right hand side liability, which is a credit. Capital, which is a credit. So total asset minus liabilities. If I'll take out the liability, what I owe, it will become net asset. Net asset always equal to capital. Okay, what is a debt click? D stand for debit. E stand for expenses. A stand for asset, like office equipment. D stand for drawing. Drawing means something you draw for personal use from the business. When you invest the money in the business, it become a business money, not your money. Yes, you have investment in the business. Okay, when expenses increase, I spend more and more, I'll carry on doing debit. When asset increase, asset, anything we own it, anything has an economics value which we can do business with it, is called asset. Like furniture, like machinery, like computers, like equipment, all these are assets for the business. So when is increase, we do debit. When decrease, every debit is a credit. When decrease, we do credit. Credit, when things increase, we do credit. Liability, if we borrow more and more, it means we owe more and more. That goes on the credit side in accounts. Liability, then we have income. Income means when you're selling something and you're generating income, like a credit sale, like a cash sale, all your income. Capital, it means investment in the business. So when is increase these things, we do credit. When decrease these things, opposite of credit is a debit. Any question?
Can you explain debit?
Debit mean is which we record. I'll show you 2 examples. Okay.
Okay.
I'll send you this handout so you can if you want to do practice debit and credit, you can as well. Okay, let's see here. I said every debit has the credit, yes. My debit side should be equal to
the credit.
my credit side. Let's look the activity and we can record. Read it. We are starting a business, yes?
Yeah.
1st May. And we start a business by paying how much? How much money we are paying? 50,000, yes? So no 50,000, what you're paying? You're paying the cash, yes?
Yep.
So it means you are investing in the business, yes? So in business money is coming in the business, yes?
Yes.
Which is a 50,000, yes?
Yeah.
Money is an asset. Asset goes on the debit side, debt click. If you keep the rule in front of you, yes? Like,
Yeah.
if you write on the piece of paper this, yes, that's the rule, debt click, yes? So you need to differentiate what is the asset. So cash is our asset. So when the money coming in the business is mean asset is increasing, yes? So when asset increase, what we do? Rules, debt click. We do debit, yes?
Yeah.
So that's under the bank. I'm recording the T account. We call T account 1T. Like, we write a T. It's called T accounts. We write on the debit side is a 50,000. And I'm writing under the capital is a 50,000 on the credit. So my debit is a 50. My credit is a 50. Yes?
Yeah.
Capital is an investment in the business. So you have a 50,000 investment and you have a 50,000 cash in the business. But that cash is gone from your personal account. Yes, because you have invested now. That's become a business. Does it make sense?
Yeah.
Okay, so every transaction you will record two effects, debit and credit. What about next? Next, on the 3rd, you bought a motor vehicle, motor van. Van is also asset, yes?
Yeah.
So asset is increasing. So you're doing van debit by 10,000. What is going when you're buying a van? You're paying a cash, yes? We paid by check. Check is a cash, yes?
Yeah.
So cash is decreasing, which is 10,000. So motor vehicle is increased, which is an asset. So I'm replacing, like you have a mobile phone, but you don't have a cash. What will be happen? You give your mobile to somebody and you can get the cash. Yes? So cash is coming, cash is debit, and your mobile phone was asset, that is credit because that's going out of the business. Out of you. You're not you won't be on it now. Yes? But cash is you own it. Cash is a debit and the mobile phone will be credit. So in the same way, you have a cash, but you bought from the cash motor van. So motor van is coming in, that's your debit, and the cash is a credit, yes?
Yes.
So that's the debit and credit rule. Then on next, we bought some goods to resell it. Purchases we treat as expense in the business. You bought some purchases, which is a debit. If you look, we have anywhere is written we paid any cash. We bought on credit 17,500 worth of the purchases goods. We bought it from the company called Rambo. So we owe it, we should pay it to Rambo. Rambo is a liability. Yes, we should pay to Rambo in future. So we bought 17,500 worth of the goods. Those are our purchases, but we owe it. Owe it mean is a liability. When the liability increase, what we do credit. So that click. So liability L stands for liability, and that is increase. We bought the goods on credit, which is a liability. Liability goes on the credit side. When I'll settle the liability, I do debit, because the liability decrease will be debit, but the liability increase will be. So that is the debit and credit rule. What I'll do, I'll send you this handout. Okay. So that's it's all the answers there. Okay. So every transaction you will see, and you keep this, you can print this slide, okay, and keep this rule in front of you. When you do few times, you will get the concept. Huh? Any question? Okay, next we're looking what is, the same thing which I said, debt click. It's one other slide. It shows what goes on the asset goes on the debit. When asset decreases, it goes credit. When liability increase, we do credit. When it decrease, we opposite debit is a credit. Okay. Accounting equation I already explained you just now. Profit. What makes profit? Income minus expenses is equal to profit. If you have a more income and less expenses, this means you have a profit in the business.
Yeah.
And which statement will show the profit? If you want to see the income statement, which is also known as profit and loss. Okay. So statement of financial position and statement of profit and loss. So both statement which I just earlier mentioned, profit and loss shows sales minus cost of sales is the gross profit, and I copied few links for you. I'll show you on the next slide. Huh? Okay. Nowadays in accounts we use a lot of software, yes, to record the transaction. Like one of the software which is quite popular throughout the world is called Sage. Anybody heard about Sage? Sage accounting, the software where we can record the transaction in the software in accounts, yes. At the end of the year, we can click the system and we can create the reports ourselves. So Sage payroll, and Sage accounts. Payrolls mean we can make the pay slips, yes. We can keep the record of the workers. It can be linked with the tax office, and the online will be the tax liability will come, we pay them. And account payable, receivable, and all this we can record in the software. Okay, next now 1.3 is analyze the legal requirements, organizational requirement for financial reporting. Okay, every company, those working throughout the world, they have to follow the accounting standards. What they have to follow? Accounting standards. How they need to record the information. Which rule they have to follow. IAS1. I stand for, anybody knows?
No.
We don't know. I stand for international. A stand for accounting, and S stand for standard.
Excuse me.
Yes?
I need to ask you, this unit is financial and management accounting techniques for managers?
Yes, it is level 4.
Level 4, right? Yeah, but you see the AC 1.4, I think 1.3 is different than the one you have.
I have this handout, which I get it.
Yeah, this is the old, I think.
Okay, no problem. If anything, if it's evaluate, we can change it. I'll recheck. I'll recheck it. Okay, so analyze, legal, and organization. You saying is evaluate instead of analyze?
Yeah, it's evaluate the usefulness of financial and management accounting statements to stakeholders. I written it in the chat. You can see it in the chat.
Yes, that's LO4. So that's LO4.
You see, there is no 1.3. There is no 1.3.
Okay, let's. Okay, so we'll go back to our Moodle. Okay, no problem if it's a confusion, so we can sort out.
You're Samit, right?
Okay, you are on Moodle.
Yes.
So you are on the ATHE level 4.
Yes, just I will. Yeah, I am.
Yes. Can you see on my screen?
Again. I sent it to you through email. You can check.
Yes, if you check it here, we have 4.9 or 4.1. Yes, there are two. Okay, you're right. Plus.
No, this is not the model I have. I don't have this unit.
Oh, maybe they send you the different. No problem. I'll check.
Level 4 extended diploma in business and management.
Yes, that's the extended diploma in management.
No, this is management. This is the old design of the course.
Oh, okay. Maybe I'm just looking. I'm just looking the page.
Yeah.
No problem. We can change it. If we need to. ATE diploma. Okay, business. Okay.
Business
So that's.
and
Yes, this one.
yes.
Is it?
Yes.
Okay, maybe I'm
No,
wrong.
no. This is administrative management. No.
Sorry.
In
Okay.
business and just business and management. Level 4. Yeah, this one. You see it? The first one. The first one on the right. ATHE Level 4 Diploma in Business and Management.
Okay. Sorry, maybe I clicked the wrong one. Okay. So no problem. I'll check it. Okay. So
I'm sorry, Samit.
no problem. That's fine.
No, I'm sorry, but this is not it. Can you go back? Again, go back, please. To the previous page. Yeah, this is not the. Yes, you see in the middle. Go with the mouse up. The first one. No, on the right. On the right. Yeah, this is it. ATHD. Yes, this is it. No, this is level 4 diploma. We need an extended diploma. IBM.
Yes.
I'll send you the link. How about that?
No problem. That's fine. I'll ask. Maybe they not upload here. Because it should be.
It's called ATHE L4BM. ATHE L4BM. Amit, you can open your Gmail, you will have it. I sent it to you.
Just if you want, copy the link. Why is this? Okay.
Yeah, this is the unit.
Okay, Abdullah, can you copy the link here in the chat box? I'll open it.
Yeah, this is the unit. This is the unit you're teaching us, by the way.
Evaluate the usefulness. Okay, that's fine. We can. I'll see. Instead of 4, I will go through 3. Which is same thing. But they change the spec as well.
Okay, Diego, can you give me your email?
Yes, just send me on my personal email at the moment. Because it's a recording lesson, so I'm still recording. And
okay, I'll send it to you right now. I sent you the file for this unit.
okay, let's see. Okay, that's fine. So they technically they reduce one learning outcome. So which is fine. I'll update my slides. So no problem. But this is almost the same thing which we are doing, where we're looking the legal side as well within the system. So let's see. That's our LO4 is actually LO3 as well. So let's next now we're looking the standards. We have a accounting standard which we use to record the information. In the UK, we call different names, Statement of Standard Accounting Practices, SAP. In the world, we call IAS in International Accounting Standard. So local company can follow the local standard, and the company, those in the world, they can follow other standards. Okay, accounting concept, when we looking financial statement, always we need to look around is provide the financial statement, financial information. Always we record transaction on the accrual basis. Accrual basis meant by that either we not record transaction on the basis of the cash. Sometimes you buy things on credit, you get the services of other company, but you pay the money to someone maybe after a year, but still we need to record that transaction in the book of account. Going concern means the financial statement provide the information. If the information shows the business will carry on business as a normal, we use the term going concern. And accounting year and the financial year, it can be different, and the different start dates. and accounting concept, prudence, and all equality in the financial statement. Those should be relevant, those should be comparable, those should be understandable. Okay, so financial information, as your evaluate financial statement, that's actually our learning outcome according to this, where we need to look around, evaluate the usefulness of financial management accounting statements to stakeholders. What is meant by stakeholders? Anybody knows what is meant by stakeholders?
Anyone related to the business, anyone who has a share in the business.
Anybody who has any interest in the business.
Yes.
Shareholders mean those are the investor in the business, but the stakeholders mean anybody who has any interest in the business is called the stakeholders. So financial statement, either in the management account or the financial account. So financial statement should provide the financial information, and the financial information need to be, and different stakeholders, they need different sort of information. So user of the financial statement, these are all the user, investor, potential investor, lenders, suppliers, and other creditors, customer, government, and other agencies, and general public. So they need information. Why they need? Like an investor, always looking, they determine whether to buy or hold or sell the shares of entity organization. It means any company share. If you want to buy it, you need to look down how many types of statement we discuss in our 1.1. We said 4 types of financial statement we need to prepare in account. Yes. What those are? Anybody knows those statements? We know the financial statement. How types of financial statement we need to prepare? How many types of financial statement we need to prepare?
3, 4.
4. Well done. 4. Those are
Profit and loss.
Well done. Profit and loss, which is also known as an income statement. Okay.
Yeah.
And second statement, balance sheet, which shows our assets, our liabilities, our capital. Okay. Third statement we call cash flow statement, how much cash in and out from the business. And the fourth statement we called how many shares, equity statement, how many shares we issued, and how many shares we and how much dividend we paid during the year. Yes. So all we can see in the separate statement, which I'll show you all the company statement now. Okay. So as earlier mentioned, stakeholders mean anybody who has any interest in the business or impact with the action from the company is called stakeholders. Okay. So the stakeholder theory, always we're looking to maximize the shareholders wealth. Bookkeeping, because it's evaluate the usefulness. Financial statement are very useful to make the decisions. These are all the user, and they can make different decisions on the basis of the financial information. Okay, so bookkeeping is if you have good record, systematic record, you can recording, classifying, like we can see how much asset we have, how much liability we have, and we can properly analyze them. We can interpret what's happened last year, this year, so we can use them effectively for decision making. Profit and loss, what shows this is the look like statement of profit and loss. It shows the sales revenue, shows the cost of sales, and when sales minus cost of sales is give us gross profit. Then we'll minus all other expenses, we'll get the net profit. Okay, which shows our profit and loss account. In the balance sheet, it shows all our assets. Asset can be long term, which we call the non-current asset, like plant, machine, like building, plant. Those are the long term. The current asset is a short term, which is carry on changing in a year, like inventory, like receivable, like cash in hand. So these are called current asset, which is short term asset. Then we have a short term liability, which we need to pay within 12 months. Like our draft. Our draft is not forever, it's for short period of time. Then as current asset minus current liabilities become a net current asset. Then we have a non-current asset minus non-current liability, which is the liability which we need to settle more than a year time, not less than a year. Like, the bank loan normally is more than a year, not less than a year. So then we have a net asset, and net asset figure always equal to capital, which we'll see some company statement now, and we'll look, some information. So all, an accounting software help us to record, and so I copy.
I have to go on.
Okay.
Thank you very much.
So what we need to do, we need to copy this link. Okay. So we have two supermarkets in the UK, and we evaluate information. Types of financial statement, and Morrison and Tesco. So how many types of statements we learn? We learn 4 types of statements. Yes.
Yes.
Yes. How many types of statements? 4. Yes.
Yeah.
And we can copy this link there, and we can open these. Okay. So this is the statement. So first we need to find which statement. Is a lot of information in these statements. So what you need to do, you need to look around the income statement. So what we can do, Control F, and we can write income. Which page number you will see there is a page number 92. Yes.
Yes.
If I can here 92, it won't be 92. It will be further down, because of course that's the whole document. So if you further down, carry on down, it will be 96 or 97 page. And actually, because that's the actual document, and we're looking. So this is there now. So which statement this? Income statement. Yes. Group mean is they have so many subsidiary companies, so we call it group. So you will see there 2 years figures there. Yes.
Yeah.
2019 and 2018. Yeah. Can you see proper now? So revenue means sales. It's also known as a turnover. What's happened last 2 years? Total was, this year is 63911, and last year was 57493. Is it increase or decrease? So last year was 57 million, and this year we have a 63 million. Yes.
Yes.
So this means 6 million our sales went up. Okay, so we can analyze it. What's happened last year, this year? Then profit. How much was the profit last year? 3352 million. And this year profit is 41. This year is a 41, and the last year was 33 million. Yes. This is not a net profit. This is a called gross profit. Because what we bought it, what we sold it, but we have some other expenses. And what is my net profit? Okay, always check there, net profit. Profit after tax. How much profit after tax? We have a 994 million, and the last year was this year we have a 1320 million. Okay, so if you look under the total column, so how much is went up? 4 million. Yes.
Yes.
So in this way we can look around what's happened this year and last year. Okay, and you can look around how much dividend, how much shares dividend they paid to the shareholder, Last year they paid 14 pence per share. This year they paid 13 pence per share to the shareholders. Every they own it, they paid 13 pence. Yes, every pound worth of the share. And then you will see the balance sheet, group balance sheet, which we also call statement. You will see the last year total asset were non-current asset 31 and now 36 is went up. Yes. You will see the current asset is went up. You will see liabilities, what's happened, these are the liability, and then you will see the net asset. Net asset always equal to capital figures. So net asset last year was 10,480, this year is 14,800. So it went up by more than 4 million, yes. And then you will see our capital is the same there, okay. Any question? And then we can see the cash. This is the equity, statement of change in equity. You will see these are the actual company's accounts, okay. What's happened last year, this year. So we can exactly the same way we can compare the final figures, total figures, okay. So, and those will help you. And when you look the cash flow statement, cash flow have three activities, which is called operating, which is a normal business. Sometime we have a spare cash. So last year operating activity generate 330 cash, and this year generate only 26. So this year cash flow is dropped. Yes, then we have investing activities. It means we have invested in the different businesses and we generate the cash. So if we look overall, what's happened overall? Last year cash was 4059 million, and this year it dropped to 2916 million. So this year cash is dropped, which is not a good sign for the business. Okay, so that's all here. So that's the way we can evaluate. Okay.
Okay.
So we'll keep to hear this lesson. So this lesson we learn what we learn. So we learn how many types of financial statement we prepare in accounts, what those are, and how we can use them effectively. Okay. And that's all today. So today we learn about LO1. I'll recheck, because why the confusion start with the unit, but I think we learn it, and different we discuss, and then we'll go through. Okay, so that's all. Anybody any question?
No.
Okay, so I'll keep up to here, and hope I'll see you in another lesson. Yes.
Yeah.
And if you have any question, feel free to drop me email.
Okay.
Okay.